The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box with Ritika Gupta and myself, Steve Sedgwick, live at Canary Wharf. Plus, of course, Karen and Ben back at HQ in the City of London. These are your headlines. Fed Chair Kevin Warsh tells CNBC at Sintra the U.S. central bank will be overhauling how it conducts monetary policy, but insists tackling inflation remains the priority.
We don't want to overdetermine things. But if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed.
And on a programming note, CNBC will be speaking exclusively to President Donald Trump tonight, 10 p.m. London time.
OpenAI reportedly floats giving a 5% stake to the U.S. government as the AI startup seeks to court favor with the Trump administration.
Doha diplomacy, oil falls to 4-month lows as mediators cite progress following indirect U.S. Iran talks in the Qatari capital, with further negotiations possible as early as next week.
And London calling. Canary Wharf CEO Shobi shrugs off Westminster's shake-up, saying the city is still a beacon of stability.
Given all the turmoil that's going on in the world, actually the UK is a bastion of stability right now in terms of the rule of law, the time zone, the amazing universities there that you have here, and the just the generational talent that comes on. Businesses want to be here.
Our C-suite lineup of guests continues throughout the morning with, well, look at that list on the wall there, everybody. CEOs of Citibank UK, Brookfield Asset Management, London City Airport, and the Financial Conduct Authority, and plenty more. Well, you lot know how this part of London is very close to my heart. It's not a million miles away from where I grew up as well. So good morning from Canary Wharf. Good morning, Ritika.
Good morning,
Great
Steve.
to be working with you again down here.
Yeah, it's exciting.
It is
Glad to be
exciting.
here.
It really is exciting. And despite everything, despite the political consternation, despite concerns about taxation, wars, inflation, you name it, despite that, actually, there is a beacon of stability in the two financial centres in London. So it's great to be at the heart of one of them, which is, of course, Canary Wharf. We're live at one of Europe's largest financial centres, but also one of the largest reinventions. For decades, this skyline has been synonymous with banking. Well, today it's becoming something much broader, attracting everything from life sciences, technology, retail and housing and leisure, alongside global finance and a certain football club just down the road. Well, we won't talk about that. It's gone through a pandemic, questions over the future of office working and companies leaving. But fast forward to today, and business is coming back. Just this week, Barclays agreeing an enormous deal, £750 million deal to buy its HQ here. And earlier this year, JP Morgan announcing plans to build, well, quite frankly, an extraordinary £3 billion skyscraper. Are there doubts about that, though? Well, we'll bring that up throughout the show. But looking forward, businesses will have a lot to contend with. Of course, as I mentioned, the UK just preparing for its 7th Prime Minister in the last 10 years. 7 Prime Ministers, 10 years. Andy Burnham on track to take up the top spot. But what will a change in leadership mean for tax policies, investment, regulation, confidence in the country, levelling up to go up north, as Andy would say in his Mancunian accent? Well, we'll be asking those questions throughout the morning with a lineup of C-suite guests, including the CEOs of Citibank UK, as I mentioned, Brookfield. I think I mentioned all these anyway, but I'll do it for it again. London City Airport and Financial Conduct Authority, and many more, just in case if you missed it 2 minutes ago. Anyway, later today in Washington, again, in case you missed this as well, CNBC will be speaking exclusively to President Donald Trump. I don't know why we're not teasing it more. That's coming up at 10 p.m. London time. In the meantime, Karen's got a handle on all the big markets. Karen.
Indeed. Thank you so much, Steve. We're going to take you to have a look at what's playing out on markets, because the first picture has been the start to the second half, and what we saw was a reversal stateside. Some of the markets weighing up plans by Meta to move more aggressively into the hardware space as a genuine challenger in the hyperscaler race, as it produces technology with much less compute. So this is, again, challenging some of the chip plays. You saw stateside Meta was one of the better performing stocks, but the S&P, the NASDAQ are both slipping there. And you saw the reality for the Dow too was to just drift in that trading session as we got going for the second half. I want to show you those US chip makers, and this is what the wash up looked like on the back of that Meta story. And don't forget those lower unconventional data centers, lower cost data centers. That's been the approach that you've seen from the likes of Meta. So whether this does have some impact, those US chip stocks did tumble on the first day of trading of the new quarter after notching record gains in the second quarter. Now, Micron and SanDisk both fell double digits, while the likes of Intel and AMD were down around 9 and 7% respectively. Don't forget some rotation here as we enter the second half after what has been an incredibly heady run. Same story too as what we're seeing across in the markets in Asia today. Shares in the chip makers SK Hynix and Samsung Electronics have plunged as a sell-off in US chip stocks in yesterday's session spread across to Asian equities. Now, what we're seeing across those Asian markets, thanks to some of those big moves, those double-digit moves, this is how it plays out. So you can see the Kospi, if we can go straight to that market, it is down 7%. The South Korean stock market suffering from those heavy losses in the chip names. The Japanese stock market, the Nikkei 225, also showing the hit, the reversal at the headline level for the index, more than 2%. Shanghai down, but Hong Kong proving a patch of green today. European futures on days of sell-offs that we're seeing in the technology stocks. It's caught up with the supply chain here in Europe in those big chip names. The 50 futures seen down slightly along with FTSE futures, but the DAX still holding around that flat line at this stage.
The Federal Reserve Chairman, Kevin Warsh, has promised to chart a new course. Speaking on Sarah Eisen's panel at the ECB's annual forum in Sintra in Portugal, Warsh declined to hint at what the bank's policy would do at its meeting later this month, but noted that inflation still remains too high. Aside from his post-meeting news conference 2 weeks ago, this was the first time that Warsh has spoken publicly since being confirmed as chair in May.
Reform does not stop at the water's edge. What I found most exhilarating about the last 2 days here is the kind of discussions that we've begun at the Federal Reserve has a lot of people at this conference open-minded, keen to think anew about the conduct of monetary policy. And President Lagarde's answer on forward guidance, I couldn't have said it better myself. We're going to chart a new course so that we can make better decisions and do the right thing.
Well, Warsh was joined on stage by European Central Bank President Christine Lagarde, Bank of England Governor Andrew Bailey, and Bank of Canada Governor Tiff Macklem, who all weighed in on the outlook for inflation and the global economy.
We don't want to over-determine things, but if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed. We're going to deliver price stability in the U.S.
When you have the underlying inflation indicating that it's also trending up as well, and that you're only going back to your 2% target at the end of 28, with a number of things happening in our inflation outlook, which includes, the market expectations in particular, you have the obvious decision, and it was so obvious that we had a unanimity decision within the board of the governing council.
There was an expectation that we would cut rates this year. That's not unreasonable in the context of the softening economy. Yeah, that was off the table in March, and is off the table at the moment. So, that was the context for me that I think we had some time, because by taking that sort of, in a sense, that loosening off the table, the mortgage rate went up 1%. So you can argue that we've actually tightened policy in the period since the conflict.
The benefit of our frameworks with flexible exchange rates is we can direct policy for what we need in our country. So yeah, you're going to see some differences. In Canada, like the UK, The economy's soft. Economy's growing, but it's been weak. There's excess supply. The labor market, there's some slack in the labor market. But yes, inflation is clearly above the target, 3.2% in May. That's a dilemma for monetary policy.
Well, US private sector employment grew slightly less than expected in June, with the ADP report showing an increase of 98,000. That's lower than the month before. That data sets the scene for the NFP report later today. It's being released a day early because of the Independence Day long weekend. Non-farm payrolls are projected to post a gain of 115,000, according to Dow Jones, which would be a step down from May. Separately, Goldman Sachs has forecast the World Cup could have an impact on hiring, potentially contributing about 40,000 jobs last month. And of course, if those job figures come in as expected, it points to a fairly robust labour market, even if it is a slight downtick from the previous month. Of course, that eases any fears, or eases largely fears of a recession, but it also, on the other hand, gives policymakers less justification for cutting rates when you've got economic growth ticking along nicely and the jobs market also holding up in that way.
I'm just going to circle back to Kevin Warsh. We didn't hear much yesterday, but what we did hear is that 2% is the anchor when it comes to inflation. And that's key because this is a man that needed to establish some credibility with the markets. There was a view that, look, this is a political appointment. How far will the central bank stray from its mandate if there are politics involved here? So real pushback around the independence of the central bank, which was very key here. The jaw boning may be significant for markets. We've been talking at length that if the markets gets any whiff that there isn't independence of the central bank, then they will price the long end of the curve more aggressively, and you will see that risk premium come back into markets. Quite a significant outing for me. But Stephen, this is one conversation that you're having down there with business, what the outlook looks like. We heard from policymakers earlier in the year, 3 different scenarios: benign, which is no longer where we are. We get things wrapped up. We've moved along by June and price stability is back. That's simply not the case. But we don't know where we're going from here because what we have, ships moving through the Strait of Hormuz, but still with significant uncertainty. And this is the problem for policymakers. They don't know what they're looking at still with this dynamic.
Yeah, I think all of the above, actually. I just want to talk about 3 areas where Kevin Warsh is going to be really interesting. One, of course, and you've mentioned it already, how's he going to vote? What does he want to do on interest rates as well? And as you and I have been pointing out for days and days now, the spread between Citi down here at 2 cuts and the others up there for 3 hikes as well. You could get a double-decker bus through that. So no one actually knows about that front at the moment. So that will be fascinating. But I think it's more interesting on perhaps the other aspects as well. One, of course, the forward guidance. Well, what use is the verbiage compared to the policy? And I think a lot of people saying it's not going to make a huge amount of difference whether he puts a dot in going forward or not, whether the market is flagging more or it becomes more Greenspan-esque in terms of the cryptology understanding what he's saying. But it's on the balance sheet that I think is really fascinating, and perhaps on the balance sheet rather than actually the direction of interest rates, where he could come up against the government quicker in terms of some form of, not so much confrontation, but diversion of views. Because you think about it at the moment, let me give you some numbers. US debt to GDP, circa 120%. It's jaw-droppingly large. The deficit, circa 6%, jaw-droppingly large. The total debt of the federal government, $39 trillion. It is jaw-droppingly large as well. And the deficit this year, somewhere in the region of $1.8 trillion. The numbers are enormous, even for someone like Elon Musk as well. Now, if he is going to narrow the size of the balance sheet, is that going to augur fiscal responsibility from politicians, pushback from politicians, pushback from the administration? Is it going to have an effect on their votability, i.e. whether the Republicans are going to have a good time in the midterms and thereafter in the presidential election? So there's a lot of interesting things where Kevin Warsh, who's in for a long term now, he will and should outlast the current president as well. Does he want to go up against the president or not? Is it going to be his interest or not? So I think as much as we're all focusing on interest rates, we focused a lot on the summary of economic projections. I think it's actually on the size of the balance sheet and the shrinkage there that he's talked about, getting it down from, I think, $7 trillion. That is where I'm really interested in, Ben.
OK. Steve, thank you very much. Indeed, we look forward to hearing from you more from Canary Wharf later. In fact, coming up on the show, Squawk on the Road does continue. We'll have more on the UK regulatory environment with the CEO of the UK's Financial Conduct Authority. Plus, Citibank UK CEO Tina Lee joins us this hour to discuss the outlook for the wider banking environment. And we'll also be joined by the chair of IBM Europe, Anna Paula Assis, to discuss AI sovereignty and adoption. Don't go away.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Robinhood announced it will launch crypto trading in the UK and will broaden its perpetual futures offering in Europe. Eligible European investors will be able to trade perps tied to commodities, ETFs and FX markets. Shares surged to a near 6-month high following the announcements. And I'm going to be speaking to the CEO of Robinhood at 10:30 BST about this, Steve.
Karen, I could not be more interested in that interview that you're going to conduct with Vlad Tenev later on. I think it's going to be absolutely fascinating. Now, the ECB Forum on central banking has wrapped up in Sintra. My goodness me. It says here AI was dominating the conversation. Maybe a stretch, because I think central banking regarding where policy goes next was also a key issue. But yeah, look, during the week, the Deputy Governor of the Bank of England, Deputy Governor of Financial Stability, I should say, Sarah Breeden, warned a kill switch may be needed for companies using AI for autonomous trading. Wow. Now, in June, the FCA CEO, Nikhil Rathi, indicated the regulator could more frequently use its power in a future dominated by artificial intelligence. Well, let's explore a lot of this more. And again, the financial innovation coming up from one side of the market, and then the regulators who have to pick up and just see what's going on. Nikhil Rathi is the CEO of the FCA and joins us now. Nikhil, thank you so much for joining Ritika and myself this morning.
Morning.
I don't know where to start. Okay, I know where to start. All we're hearing at the moment is these amazing, sometimes young companies, sometimes very sophisticated companies coming in with new product, whether it's AI-based, whether it's crypto-based, whether it's stablecoin-based more broadly, whether it's about prediction markets, whether it's about more of a foray for retail investors getting involved in private markets. And the innovation, in my lifetime, I don't think it's ever been swifter. You have to basically regulate this as well. Your job must be an absolute minefield at the moment. Can you keep ahead of all of this?
We haven't seen technology and innovation moving at this scale and pace and force ever before. And for the UK, this presents an exciting opportunity. We've got a phenomenal AI science base, a phenomenal innovation centre here in Canary Wharf and the city. And if you think about the growth challenges we have in the UK, the way we tackle our productivity challenge is through the rapid diffusion and adoption of this technology. But as you say, there are also risks, but we need to be balanced about how we tackle those risks and open-minded about how we do that. And what I was saying last month was we have a mechanism in the UK where you legislate and you bring in rules for new technologies, but the reality is some of these technologies now move in weeks or months, and the traditional cycle of rulemaking simply doesn't work in that way. So we need to think about new tools and a different way of working with the market in a more collaborative way, for example on financial crime and AI risks, to be able to make sure we secure our objective of market integrity.
Karen's got this great interview with Vlad Tenev later on as well, and I've had the privilege of speaking to him in the recent days as well. And the number of products, the number of exciting products he wants to bring to the UK and to Europe is quite extraordinary as well. But herein lies my issue. When we had less sophistication in new product innovation, but still new product innovation in the GFC, I think it's fair to say that the regulator, the Bank of England and the Treasury, the tripartite authorities, missed a lot. How can we be reassured? How can our viewers who are the people you're looking at, how can we be reassured that actually this pace of innovation is not going to slip through the net and create problems going forward?
Now, I was involved in the response to the financial crisis in 2008, and we put in a lot of infrastructure after that, whether that's the Financial Policy Committee to monitor financial stability, which I sit on, as well as in the international fora, the G20 and Financial Stability Board. Yeah. And so already when we've seen these new developments on frontier AI, the Financial Stability Board has already talked about some of these issues very openly, and there's international discussions underway. You're right, though, that technology moves incredibly fast, and we need to think differently about some of the innovations that we are seeing. On AI, for example, in the UK, we've established the AI Safety Institute, which is 250 really expert people who can help not just us as financial services regulators, but the whole of the economy understand these risks, but also understand how we can adopt this technology safely. And I think we can, in being humble about it, say, look, this is what we understand, this is what we don't understand, but we don't want to stand in the way of adoption, but let's all be transparent about where the risks might lie.
So, Nikhil, how do you respond to critics that maybe say that the FCA is too cautious, it's too slow, and when you're trying to compete with the US and parts of Asia in a space like AI, like how do you get that balance right? Because, of course, innovation is what's going to be driving this economy forward. We don't want to get the UK falling too far behind.
So we've led the way in terms of innovation sandboxes. Over 1,000 companies helped through all of our innovation services. They're widely regarded as being world leading. If you look just at the last week, the speed with which we've moved in new areas such as digital assets. In this week, we put a full regime around crypto into force. Probably the most significant wide-range regime of any major economy. We approved the first tokenized fund end-to-end on-chain by Bailey Gifford and Bank of New York Mellon. We've got a consolidated tape for bond trading going live in the last week as well. So we're moving fast, and we've also said on AI, we're not going to put in lots of new detailed rules. We have an outcomes-based regime in the UK, we have our senior managers regime, so we don't always have to write new detailed rules to allow that innovation to take place.
Nikhil, are you satisfied right now with the pace of capital markets reform? Because what can the FCA do right now to improve UK listings? Because from what we've seen, sometimes a lot of them are flowing out of the country now. They're looking at the US when they want to list or when they want to get that next fund rounding. So how are you keeping that in the UK, in London?
So when you think about the UK financial services industry, you have to think about the entire ecosystem here. So as well as equity trading, we are the largest centre for reinsurance. That's grown, doubled in size over the last 10 years, major centre for international wealth management, and major centre for trading of commodities, fixed income products, all of which have been seeing record volumes, particularly during the course of this year. Yes, equities has been challenging. We've put through the fastest and most radical set of reforms on prospectuses, on listing, enabling private companies to use an intermediate trading venue, and the government has passed some legislation around pension schemes which came into effect at the end of April, which now need to be implemented. And one of the big challenges we have in our savings environment is how do we get more pension money investing in productive UK assets, and that's an issue that goes beyond regulation and goes much broadly into the economy.
Nikhil, again, I love it. I think it's great that we're at the forefront of this. I think it's great that you've got a new policy framework to working with these brilliant new products and brilliant new innovations. But I think I'm coming at this from a similar point of view as well to you. I worry about the protections for a whole class of investors that the government... You started at Treasury. I mean, you were at Treasury under Blair, weren't you, I think, in 2005, 2008, with Mr. Gordon Brown, who was the Chancellor. I worry that a lot of investors are getting involved in products they don't understand. They are being sold things that they just don't get. And you know, it's probably down to you and your team that we have at the top of a lot of these websites. Users on this site lose 76 to 90% of their money as well. I worry that we're getting a whole generation of people who are getting into markets, whether it's prediction, whether it's crypto, whether it's AI-based, whatever, that actually they don't understand. They're being told they've got a load of new information, a load of new trading tools, but it's a load of garbage, actually, and actually they're losing a lot of money. Are the protections good enough?
So there's a choice here about what innovations we allow in. On crypto, we've been really clear all along that we will allow in innovation, but these are high-risk products, and people should only put money in that they're willing to lose, because there's no way you can guarantee that your capital's protected if you're going to be investing in crypto. What I'd also say is that technology can empower consumers in a way that has not been possible before, because suddenly with AI you can get access to information, you can get access to advice at a speed that simply wasn't possible before. when we put through radical reforms which came into force in April on the advice regime in the UK, we deliberately tested it with new forms of digital access for advice. And we're seeing some really interesting innovations come through and take up to get to that 91% of people in the UK who have over £10,000 and are not taking advice.
Sure, and Rachel Reeves, Andrew Bailey, yourself and others would love to see this great generation of investors come back to you. I mean, I remember Tell Sid. I mean, that's how old I am. Maybe you do as well. I remember when there were the great pushes in the 80s as well. But what I fear we're getting is gamification. We're getting short-term gambling and trading rather than investing.
So there's different components here. One is there's investment that goes in the UK largely through pension funds, and we have auto-enrolment here, which is hugely successful. That money isn't going into prediction markets or gamification or crypto, and that's where the bulk of UK citizens' savings assets are. And then, of course, there are these other products too, and what we say to people is you need to be thoughtful about how much of your money you put into them, but I don't think it's for us to say ex ante we're going to ban everything and stop you from accessing. Also, in a global world where people can access these products overseas as well, that wouldn't be realistic either.
Nicola, I wanted to get your thoughts on defence investment, because the FCA has fast-tracked the approval for defence-focused investment funds. This is as we're seeing Europe with this big push now to rearm. How important is that in the geopolitical landscape, and are you seeing investors' attitudes towards defence fundamentally changing?
So we have a primary objective at the FCA of market integrity, and we have an extraordinary challenging geopolitical environment right now, and I look at the risks to market integrity, and they come from economic security, from some of these geopolitical tensions. They're completely interconnected, and that is why we have set out this work with the Ministry of Defence to work with the financial services industry to connect investment to strategic defence of the country, the security of the financial system, and also, by the way, a massive growth opportunity for financial services and the UK more broadly, because we have amazing defence startups, we have world-leading research on quantum, we have world-leading research on cyber security and companies here which have dual-use technologies that can be used to defend the country militarily, but also secure our civilian infrastructure as well.